Good afternoon and welcome back, everybody. US Home Talk here. We are live every Wednesday, noon, live every Wednesday at noon and on demand at ushometalk.com. We do have our new website up and running, ushometalk.com. Check us out there. But we are also everywhere you find your podcasts. So I'm your host, Mike Overson. Here we have Jason Walgrave with Walgrave Real Estate Group and the Minnesota Real Estate Team at RE/MAX Advantage Plus. And I also have Marcus Walgrave here with Hague Realtors. We're taking all your questions during our show today. We're going to answer those live during our show. Anything and everything dealing with real estate. The call-in number is 612-234-7585. Again, that call-in number is 612-234-7585. Or you can also go to the comment section on Facebook and submit a question there, and we'll answer it live during our show as well. We're also going to be answering any questions that came in throughout the week and then covering some current topics and events here in the mortgage and real estate world. So, fellas, how we doing today?
Good.
Marcus, you're looking scruffy. I like
doing
it.
Fantastic.
Got the scruff going.
Doing fantastic.
I blame the children on that one.
Yeah.
They've been just beating me up with waking up all night long and telling me about dreams and thunderstorms and all that fun stuff.
So you got just enough time to wipe, but not enough time to shave, basically.
Yeah, I'm pretty sure I can shower. I can get a shower, but
Yeah.
that's about
I
it.
hear you, man. We've all been there. Jason, you got to be in that same boat too, roughly. I mean, you got the youngest in the group, right? A 7-month-old.
Yeah, 7 months old. Yes, and it was, speaking of thunderstorms, that was, so not last night, but the night before I had Theodore. He came and woke me up at like 11 and woke me up. He said, I'm scared. Can you come tuck me in? So I said, yep. So I got up and tucked him in. Then an hour later, Eliana comes in. I'm scared. And can you come tuck me in? Yeah. So midnight went and tucked her in. But it was the thunderstorms. And then wake up the next morning, my stupid dog is snuck up into our room. And so she's laying in there. So apparently the dog got scared too. So it was a night of terror in the Walgrave house.
Yeah, that's our boys every once in a while will do that too. I mean, Trey randomly wakes up and just crawls into bed with us, whether there's a thunderstorm or not. It just happens. But we like to use melatonin at our house just to give them a little extra knockout punch. Hopefully they sleep through the night. Do you guys use melatonin at all, by the way? I don't know if I've ever asked you that.
Scotch.
Yeah. No, not for yourself, for your kids.
Oh, no.
I thought you were supposed to use like a little bit of brandy.
I mean, whatever works. Whatever Grandpa Walgrave taught you guys. I'm sure that's all good. All right, so we're going to talk.
Grandpa Walgrave never drank, so.
Oh, okay. Nice. All right, so what are we going to talk about today? I want to talk about the cost of waiting, right? So a lot of questions, we get this question on a daily basis from our clients is, do I rent for another year or do I buy now? Is it a good time to buy? So let's talk about that, because I was going through a little exercise with someone the other day of, let's just look at your costs over the next 12 months. What does it cost you to rent for the next 12 months? What does it cost you to own for the next 12 months? So what I spoke about with this particular client was, let's start with renting, right? So let's get in, Jason. So we're in the Minneapolis market here. Marcus, here in Sioux Falls, which is probably pretty similar price points, probably pretty similar rent points, I'm guessing, but Jason, let's say we got we're comparing a $350,000 house. So you got a 3 to 4 bedroom, 2 to 3 bathroom house, kind of your standard first time house. What would it cost to rent something like that in our market?
Probably $2,500 a month.
$2,500. Marcus, what would it cost, for like a 350 house down there in Sioux Falls to rent?
I've always kind of looked at, and Jason and I've had this conversation in the past too, in terms of like our median sale price in the Sioux Falls market compared to the Twin Cities. It seems like we're about 10% more affordable down here in the Sioux Falls, South Dakota real estate market, and we get that a lot for people who are looking to move here, whether it's to get to family or job opportunities. They're always excited because the cost of living is more affordable than it is in the larger cities. So I mean, what you guys see in those bigger markets, we're about 10% more affordable.
Okay, gotcha. So let's stick with the $2,500 for rent. So pretty easy math equation, right? So $2,500 over the next 12 months, that's $30,000. It's going to cost you $30,000 to rent there. But the other thing we have to also consider too is that because you're renting, you don't own your house, and so you're missing out on appreciation. So that is another, like, an opportunity cost, if you will, for renting, because you're going to delay buying for another year. So you're going to miss out on the appreciation on that house you would buy for the next 12 months. So looking forward here as to what a $350,000 house would appreciate at, a year from now, what's that $350,000 house selling for?
Well, it's probably going to go up 6%. I think conservatively, 6% in value.
Okay. So let's say we even cut that down. The 40-year average is 4.2%.
Yep.
So maybe let's go a little conservative and then just say 4%. Okay. So now that 4%, let me bring up another calculator here. So if we got 350 house times 0.04, so that's another $14,000. So really, it's costing you $44,000 to rent for the next 12 months because you got to pay your rent, and you're also missing out on the appreciation.
And we're not even bringing up the tax benefits.
Right.
When you align yourself with your CPA and talk about the benefits of being a homeowner. So I mean, just talking about the nuts and bolts, a lot of money.
Right. So now what does it cost? So what does it cost you on a mortgage payment then at current rates for that $350,000 house? Well, the principal and interest is $2,328. Okay, so we'll take $2,328 and we'll add on top of that insurance, taxes, and PMI. You're sitting at about $2,700 a month. Okay, so now the cost to own that property, $2,700 times 12, is $32,400. Okay, so you got to remember some of that is principal reduction, right? So it's not a true cost because it's basically like a forced savings. It's money in your pocket. But if you're looking at basically money out of pocket, if we try to simplify that and say money out of pocket on both sides of the coin, what does it look like? It's going to cost you $32,400 out of pocket then to own that $350,000 house. It's going to cost you $44,000 in order to rent that same house. So just with the simple math and a simple example like that, I mean, you're 10 grand ahead of the game. And like Marcus said, we haven't even spoke about the tax benefits that come with it that is going to even make that difference greater.
Yeah. The tax benefits and the forced savings, right? And so part of that payment is going to go towards your principal balance buy down. So that number becomes even larger when you take that into consideration.
Yep. So kind of a simple exercise that I went through with someone, and it kind of opened up their eyes, because when you start talking about that, it's like, yeah, you have the cost of the mortgage payment or you have the cost of the rent, but what's your opportunity cost that you're losing out on by owning that property versus not owning it? And we only used an average, we used a conservative 4% there, 6%, 6%, you're going to throw another, $7,000 in your pocket if it appreciates at 6% versus 4. So,
right.
And I've been getting, here, I feel like I've been getting this for years now. Definitely since 2020. But they'll kind of make that comment of, okay, well, we keep on hearing the news about the value of homes are going to come down. And we've been talking about this, all year on US Home Talk, and that's kind of one of those kickers. It's just like, in certain markets, yeah, that may be the case, but it's definitely not in the Midwest. I mean, if you look at any kind of you look at any kind of forecasting with what's going to happen in the Midwest, for home values, they're going to go up. And then if you get real specific in terms of specific price ranges or style of homes in specific markets, they're going to fluctuate as well. So I think that 4%, like you're saying, Mike, is conservative. And Jason, your gut's telling you maybe 6 up in the Twin Cities area, but that's again that's as a whole. I mean, there's going to be specific price brackets that are going to see even a larger increase. So I mean, if you're talking about somebody who's trying to look at the numbers, and I think sitting down with somebody like Mike, you're going to be able to at least get the basics. The trying to compare dollar to dollar in terms of cash out of pocket expenses, and but if you really want to find out the big picture, I mean, there's more to it.
Yeah, and there's waiting. The whole waiting thing. We've heard that a lot too. It's like the only way waiting makes sense is that if you're back in 07 and 08, right? So it's like houses are priced at X today, and when home values went down 40% over a 2 to 3 year span, that's been about the only time in my career, and probably about the only time in the last 50 years where waiting has made sense. So you had a 2 to 3 year window where maybe waiting made sense. Over the last 50 years, the other 47 years, it costs you more to wait to buy. So another thing to look at too, it's like, there's a reason why Dave Ramsey is saying buy now. There's a reason why, who's the guy out of Omaha, owns a bunch of real estate. Why can't I think of his name? Anyway, I'll think of it later. Is he
rich?
Yes. Yeah.
Buffett?
He owns a bunch of companies and stuff. He's like Berkshire Hathaway. He owns like Berkshire Hathaway.
Warren Buffett?
Warren Buffett. Yeah. Warren Buffett, right? There's a reason why those guys are saying that, right? There's a reason why they're both saying that they are buying real estate right now, right? They're buying real estate. They're real estate guys, right? They're wealthy. There's a reason why they're saying that. And it's because they see that home inventory is low. And even with where interest rates where they're at now, that home values can really only go one way because of the inventory level.
Right. And that inventory level is not going to change in any significant level in the next 5+ years. I mean, it's just, we're not going to see, I mean, we've heard, whispers of, the flood is coming, the flood of homes is coming for sale to the market. We've been hearing that for the last 10 years. And there's no flood of homes coming to the market. I mean, we've been at, virtually the same level of inventory for the last 5+ years. That's not going to change in the next 5 years, or at least not a, significant amount. And so, and then we get clients that say, well, I just want to wait till next year because I want to save up another, 10 grand for down payment. Well, that, once we show them the numbers and again, this is what appreciation will likely be. And so, here's the cost of renting for another year. Well, there's your 10 grand right there. It's going to cost you 10 grand more just to rent. And then you don't have any of the tax benefits. You don't have any of the forced savings. And so it's, you don't, unless it's, I guess, unless you were expecting a big inheritance of, a couple $100,000 and you wanted to use that, to put down on the house, well, then maybe it makes sense to wait a year to get those funds. But then even with that, Mike, I mean, you guys have recasting, and how long can you wait to recast that loan? Is it 12 months or 8, or what's the timeline on it?
You can do it at whenever you want. You get to do a recast one time during the life of the loan. So you can do it on month number 1 right after you close.
Yep.
You can do it on the last month. Well, you're not going to do it last month because you're just going to pay the loan off at that point. But you can do it at any point during the life of the loan, and you get one time to do it.
Yeah. So what is recasting? What does that mean?
Yeah. So recast, for example, just had a conversation with someone about recasting this morning. So they're in a situation where they're non-contingent on the sale of their house, meaning that they are buying the next house without the contingency of their current house selling. Well, their current house is not under contract to be sold yet, but they got a closing date on August 1st coming up on the new house. So they have to close on the new house, and they won't have the proceeds from the sale of their old house to put towards it. So we had that conversation of, well, how do we do this then? I said, well, you're going to do minimum down. We're going to do a 5% down payment on the new house. We're going to get you closed on that. Once your old house sells, right, after you're in your new house already, you're going to have $130,000 to apply towards the loan on the new house. So we're going to recast the loan. So after you apply that 130 grand, you have a lower loan balance now. And you're going to have, 25% equity in the home. So we're going to readjust your payment based on that newer loan balance, and we're going to remove the PMI from your loan. So it's like you had the 25% down right out of the gate.
Yep.
So they end up at the same spot they were in anyways.
Yeah.
So
and that's a great option. I mean,
go ahead.
That's a great option. I mean, if there's any folks out there that have the ability to, to buy their next house first, I mean, it eliminates a lot of concerns. One of the biggest concerns sellers have had in the last couple of years is, well, I don't want you guys to list my house because I think it's going to sell too quickly, and then quicker than what it's going to take me to find something to buy, and then folks think, well, I want to use this equity to put into the next house so that the loan isn't so high. Well, here's a solution to that. You can recast it. You can still use that equity when your house does sell. You don't have to stress out about, moving too quick or settling for something that you don't love because you're on a time crunch. And it gives you some great options. I mean, I think recasting is a fantastic way to eliminate a lot of the stress of selling your home and buying the next one.
Yep. Yeah, it is a great way there. Marcus, have you run into that situation much down there?
Yeah, I mean, with most definitely, it's interesting too. Where when we start seeing some of the national news and that Shark Tank, Barbara, I'm gonna mispronounce her last name, but was it Corcoran? I mean, she kind of made the comment about why if you're in a position where you can buy, and she was speaking specifically on residential. She had her own opinion on commercial. It seems like a lot of individuals are thinking that commercial might see some downturn here in the near future, and it might get a little rough. More kind of the big office buildings that might see a little tough times. But when she was talking about residential, she made the comment about how, in her opinion, what she thought was going to happen was that when interest rates do come down, and which does, a lot of people are forecasting that they do come down, and if they do come down maybe more than what is forecast, buyers are going to just be so excited about that they're going to go after, and they're going to go after hard. And she's referring to it as we may see 2021 again. Yeah, and if we're talking like that, then we're not talking 4% increase in appreciation or 6%. It may be closer to 8 or 10%. And if you're looking at those kind of numbers, crunching those kind of numbers, if that scenario does play out, then it's like, holy buckets. You're gonna save a ton of money being a homeowner than sitting in the sidelines waiting for to save up money. Jason, Mike, I know you guys have heard this before. Well, I'm just going to hold off. I want to get my interest rate, or excuse me, my credit score better, so I can get that 0.25% better rate. So I want to wait 6 months to do this because I want that 0.25% better rate. It's just like, that's you don't, if you're in a position where you can buy residential or real estate, now, and you want to do that, it's you move forward and you make it happen. You don't sit back and wait for that rate. You can always refinance or recast a loan payment to get it if you're more comfortable in having a lower monthly payment, you can recast it to achieve those goals. So, there's really no reason to wait. If you want to buy and you have the means to buy, make it happen.
Yeah, agree.
That's interesting that you bring that up, because I just saw a report the other day that our CEO of Luminate sent out. I can't remember the company or the person who put it out, but they were saying that based on their economic modeling, right, over the next couple of years, they think that we could see interest rates, 30-year fixed interest rates at 4% by the end of 2025. And so that's funny that you mentioned that Barbara said that. I didn't catch that episode that Barbara said that we could see 2021 again, which, rates again were down between 3 and 4% for the bulk of 2021, more towards the 3% end. But anywhere in the threes is crazy low, right? And it's funny that we had two things, we had an individual, obviously a respected individual through Barbara there on Shark Tank. And then this other company that came out said that we might see interest rates that low again as soon as, that by the end of 2025. And you're right, Marcus, if that happens again, right? That happens again, a bunch more buyers jump in the pool, right? Yeah. Now you go back to the bidding wars. I'm going to go 20 grand over. I'm going to go 30 grand over, right? So now if you own a house at that point, and even if you're not selling, right? Even if you're not selling, but a couple in your neighborhood sell and they sell for 20 to 30 grand over list price, what did that do to your value? Right? That just bumped your value up. That's why you buy now, because you're going to miss out. If you don't buy now, you're going to miss out on that appreciation that's going to come when rates do get lower, and you start seeing that around you. If you are going to sell, right? If you are going to sell, well, now it's like, all right, I got 4 to 6% appreciation for the next 2 years, and then if rates are down at the 4% again in 2025, and I'm looking to make my next move, I'm going to get 20 to 30 grand over list price. So now I just gained 12 to 18%. Appreciation plus an additional 20 to 30 grand kicker on there. Look how much money you just made yourself simply by just owning your house versus renting.
Yep. And we love running these numbers. We love running the scenarios and showing clients, here's what it means if you rent for the next year. Here's what it means if you buy. Here's what, and just plugging in the different numbers and the different likely scenarios of where those properties will be a year from now or 2 years from now. And it's that's the beautiful thing about just running the different scenarios, because we can give all that information to our clients, and a lot of times it's eye-opening, right? They're like, wow, I never even thought about that, and we joke often. It's like, look, whether you're owning or renting, you're making a mortgage payment, one way or the other. You're either making yours or you're making your landlord's, and so you're either going to take the benefits of owning, or the landlord's going to take the benefits of owning, and so look, buying isn't always the right thing to do. I mean, it's, maybe you're only going to be, in the area for a year, or, or 18 months, or you don't really know where you want to be. I mean, there certainly is a place for renting. I mean, we've all rented before, but in most cases, when we take a look at our clients, specifically their situations, it's better to own. It's better to buy than it is to rent. And so, and our job is to give our clients all the information that's out there, to give them, all the options that are available, and then they can make the best decision. But it is, it's great to run the scenarios, because then you can see it. You can see it right on paper and see the numbers.
Yeah, numbers don't lie.
Nope.
One thing to really emphasize out there for our listeners, or anybody who's maybe listening to today's show and sharing the information that you heard today is simply, this is our full-time jobs. This is what we do. You're not wasting our time by giving us a call and asking us to run numbers. I come across that often, like, well, we're interested in it, but we're just kind of getting started, and we don't want to waste your time. We don't even know if we can make it work. It's like, well, we are the ones who can help you actually make that educated decision. So don't hesitate to reach out to Jason, or don't hesitate to reach out to Mike and just simply have the conversation. You are definitely not wasting anybody's time if you just want to have numbers run for you, whether that's a free comparative market analysis on your home value, the cost to buy now or to wait until next year. You owe it to yourself to get the information, from professionals, and so don't use the Midwest nice and say, well, I'm going to wait until we have everything, ready before we give you a call. It's like, no, if it's even a consideration, you need to go ahead and get that ball rolling.
Yeah. I mean, we say all the time, whether you're thinking about buying in, 3 weeks, 3 months, or 3 years, we want to talk to you today. And likely the sooner that we talk to you, the more options that you're going to have. And, and that goes into, maybe, improving your credit score from good to great, so you got more loan options, or, we've got more time to identify and search for the home that you want. And so, yeah, I mean, and maybe it's 5 years from now, maybe you just graduated high school, you're going off to college, and you want to talk about, how do I position myself to buy a home once I graduate college in 4 years? We want to talk to you now. We want to give you the things that we've learned. We want to share our experiences with you and position you in the best place possible when you're ready, whatever that timeline is, 3 weeks, 3 months, 3 years, 10 years, whatever it is. We want to be here for you and be a resource.
We did have a Facebook question come in here from Corey. So Corey says, what program do you use to crunch all those numbers, or do you just use the old calculator? For today's example, I was just using a calculator, to be honest with you, right? We have programs that help us with stuff. So, I mean, Jason and Marcus have an investment property calculator, right? Does buying this investment property make sense? You plug in the purchase price, you plug in all the stuff, right? And it gives you your rate on return, your cash on cash return, helps you calculate all that stuff. Today's simple math, as far as just what's it cost you, right, to wait. That was just using a calculator here. So we have a bunch of different tools depending on your situation of what we can use to run these numbers. So it really depends on, I guess, specifically what you're asking for, and then we have, we'll have the right tool to use to run that for you.
So great question, Corey. Little shout out to Corey. He his son is a fantastic wrestler and lacrosse player. And so we've got, my boys and I have got a chance to get to know Corey and his family over the last year. And so appreciate you tuning in, Corey.
Nice. I'm curious to get Evan on here too. So there's been a lot of news on the insurance side of things with insurance carriers limiting where they're going to write policies at, right? I think Florida, California, are two markets where I know a lot of insurance companies, big players too, like big nationals, Farmers, State Farm, Allstate, if you will, are pulling out of those particular markets. I'm sure you're seeing that too on your side, right, Evan?
Yeah.
What do you think is going to happen with those markets as insurance companies are pulling out, saying, look, we're just not going to write new policies in those areas?
Well, I mean, it's a complex question, but I was actually laying this out on one of the insurance subreddits earlier that if there is no intervention to fix the problem, it could cause a widespread economic catastrophe, which would be really great, let me tell you. So the way, yeah, option B. Well, I mean, like, so here's the question, Mike. If you can't get insurance for a home, can you get a loan on that home?
No.
Yeah, it's the broad answer to that question would be no. And if you have an entire marketplace that just can't secure insurance anymore, not only are you not going to be able to sell new homes, but companies are going to start trying to call notes due because they're not even going to be able to force place insurance. For those that don't know, if you stop paying your homeowner's insurance bill, right? You just go, you know what? I don't actually feel like I need this, but you have a loan on your house. Your bank will buy insurance for you, It's very bad insurance. It's very expensive insurance, but they will just say, hey, we received a notification of cancellation of your homeowner's insurance. We are a party on your home. We're going to buy you insurance. Here's the bill. Well, if the bank can't do that, then their only other option to protect their own ass is to say, we're done. Give us our money now. we're just not going to wait the 30 years for our loan. And obviously, for most homeowners, that's a untenable position. So, something in the market is going to have to change. There is no way that people, like, I have been seeing stories of renewal bills in Florida that are equal to 5+% of the value of a home. And it continues to climb. Imagine paying 5% of your home's value every year just in insurance costs, or 10%. I would walk away from that home. I wouldn't pay that. I would go somewhere else.
So costly. It's like, could you even afford it?
That's insane.
Right, yeah, you buy a $500,000 house and you're paying 50 grand on a 10%, 25 grand on a 5%, somewhere in between there. I saw a story about a lady that has a house that's like $600,000 and it's a $60,000 insurance bill. And yeah, it's not affordable.
Right.
Yeah.
Yeah,
but you can't sell the house either because no one else can afford that insurance bill. So now the value of that house went from $600,000 to zero because no one is going to buy it.
Right.
So if that continues in Florida and, everyone just kind of gets in a big circle and points fingers at each other and says, it's the insurance company's fault, it's the bank's fault, it's the state's fault, etc., then it could be very, very bad. So let's not do that.
Yeah. So, and kind of the reason I brought it up is, because Marcus was saying earlier that our values in the Midwest, are pretty predictable. I don't think there's one person thinking that they're going to go down, they're going to go up. My point with bringing this up is that different markets like Florida, like California, maybe some other places, it's less predictable out there. So depending on where you're located geographically, what we're talking about today maybe doesn't carry over necessarily, into like a Florida type of market when you have this insurance stuff going on.
Yeah, absolutely.
But if you're talking the Midwest, Evan, are you seeing anything on the insurance side that's really moving the needle, or it's just like, yeah, you just kind of have your normal yearly increases in premiums because replacement cost is more expensive now, and that's all you get?
I would say things are more stable in the Midwest. A lot of carriers are very nervous about both wind hail losses and wildfire losses pretty much across the country, truthfully. But it is not to the same degree of rapid escalation that we've seen in the Southeast. And for wildfire risk out in California, that's the big thing. But, the other concern is always, our company's going to be able to charge what insurance actually costs? And the answer to that question might be no. Some companies are starting to play around with the idea of pulling out of Colorado, it looks like, because of similar issues that they're facing in California. But it's a complex thing. I think that part of the long-term solution, we are seeing more frequent severe wind hail losses here in Minnesota and across the upper Midwest. And I think a part of the solution is to just change building codes. I think that the era of the asphalt roof, whether you're talking about regular or architectural shingles and stuff, may be on the verge of coming to an end. Like within the next 20 years, it may be that part of the solution is to just change building codes to require tile or metal roofs that are going to be able to sustain more storms. And, like over time, it just becomes the norm. Because, obviously, there's a whole lot of factors that went into what makes a home look like a home. And now people are kind of latched onto that. They want the architectural shingle because they believe it looks good because that's what everyone has. And metal roofs are ugly, et cetera, et cetera. But I don't think that that's all that true, personally. But beyond that, it's sort of a feedback, self-fulfilling cycle. But at some point, either the insurance carriers or governments are going to have to step in and just go, you know what? We can't be replacing these 30-year roofs every 8 years. So we're just going to not do that anymore. Metal roof only.
Right. And we talk about this, homeowners, we're talking about homeowners insurance. You got to remember, if you're renting and the current landlord or the current owner of that property runs into something like this, guess where that additional cost gets put on, right? Rents go up because of that. So it's not, you can't really get away from, the type of insurance increase and stuff that we're talking about by renting, because, all of that cost is going to go downhill to the renter, because now that landlord needs to make more money to cover the additional costs and stuff. So,
yep.
Yeah, very interesting. Yeah, I'm curious to see how the insurance stuff plays out, because I know that Florida has been a hot topic lately. But I know that also.
I mean, you said farmers. They're not just pulling out a homeowner state. They have said that they're non-renewing all policies in the state of all types.
So that's home,
business, general liability, all of it. They're just like, you know what? We're done with Florida. It's not worth the effort, which is insane because it's a very large market.
Right. That's kind of crazy. Yeah. But Florida doesn't the state have an insurance program down there? That's a very big provider.
Yeah, and that continues to be the problem for Florida, that their only solution to this is basically the state providing insurance that's not as good, or rather, as good is the relative term, as broad of coverage, and doing it at a subsidized rate where basically taxpayer money is going into it. So most states have programs like that for when you can't find coverage otherwise, to try and fill a gap. We have it here in Minnesota, but it is not supposed to be a regular use program. It is supposed to be for, like, let's say someone who was previously convicted of arson is let out of prison after, serving 7 years or whatever. And that's an underwriting question. Has the homeowner been previously convicted of arson? You check yes. And most insurance companies are going to go, that doesn't fit our underwriting guidelines. Sorry. So there is an option so that person can buy a property. Or, they just have had 4 or 5 claims. They were very, very unlucky. Their roof was replaced. Then they had a liability claim, and then their house got hit by a tornado, and so on and so forth. There are all sorts of things that can land a person in a high risk pool where the insurance companies generally say, no, thank you. And that's how that's supposed to work. Is it's a very limited subset. We're talking about 1 out of every few hundred homeowners goes to this, and in Florida, it's like 30-something% of the market. It might even be higher than that now. Are having to go to Citizens. Yeah, it's nuts. It's absolutely wild. Yeah.
That's so interesting. So interesting to me on how all that works. And it's a lot of the stuff. It's kind of like, there's a lot on the back end. I had one of my clients say, hey, I found this off-market property. I was working with an agent, but what does it look like? I'm going to try to do this without a real estate agent. And I said, everything dealing with real estate, whether it's insurance, whether it's on the real estate side of things with purchase agreements and this and that. And now this property had a septic and a well, so that adds additional layers and stuff. I said, look, technically, do you need a real estate agent? No. Right. I would highly recommend it. There's so much that happens on the back end, and there's so many I's that need to be dotted, T's that need to be crossed. If you don't have an experienced, watchful eye on your side, you can get yourself in a mess. And then it's going to be an expensive mess. So I said, look, I would highly recommend you reach back out to your agent you're working with to help you through this. But it is technically your choice. So you just have to, keep me posted on what you decide to do. He emailed me back the next day. He's like, yeah, you're right. He's like, I'm going to reach back out to Joe and have him help. So, and the insurance thing too. I mean, it's like you go online, you get a quote for insurance. Do you know what kind of coverage you got? Did you physically talk to someone? You know what I mean? Because Evan, just as well as we do that homeowners don't understand, and they don't know how much stuff they got until you start going through there of like, well, what happens if this? Well, do you have that? Do you have coverage for this? You know what I mean? And it's the experienced, watchful eye that we provide that can save you a ton on the back end.
Absolutely.
So, Jason, Marcus, anything else you guys want to cover today?
Just don't hesitate
good
to ask if you
information.
got questions.
Great information. As always. Yep.
Well, perfect. Well, as the show comes to an end this week, we want to thank everyone for tuning in live or catching the podcast at a later time. You can find us anywhere, wherever you find your podcasts, and on our website, ushometalk.com. We're here to help with all of your real estate and financing needs here in Minnesota, South Dakota, and the entire United States. I'm Mike Overson. On behalf of Jason Walgrave and Marcus Walgrave, we're signing off and have a great week.